Okay, is trading any different than any other thing you do in life? So if you were going to change the oil in your car, are there certain things you could do that are really kind of like special things? Maybe fill up the, if you're going to change the filter, you fill up the filter with oil before you put it in. There's all sorts of, I guess you'd call them tricks or things that make logical sense. And I think we've all seen stuff where we say, wait a minute, like the logic flag goes up in your head and you say, but that doesn't make any sense. So I'm watching this, I'm looking at the latest Trade Empowered video with Akel Stokes. And the guy's, I couldn't help but notice that it looks like he's a normal guy and normal people trading and doing presumptions about ABCs and ABCD patterns. And I noticed already his count on his ABC here is kind of interesting because I don't count A. When you do RSI counts on signals from Andrew Cardwell, who really is an intellectual heir of Wells Wilder, who invented RSI. He's got the RSI on the screen here. When you do the count in his system, like you don't count wave, when you're doing Elliott wave, you don't count wave 0. There is 0, then there is 1, 2, 3. So I'm cracking up here because I'm looking at his video and I see that he has A, which is 0, listed. So it's so funny how just one number off or one letter off changes the whole cadence, the whole idea of counting and predicting and all this stuff. So for instance here, you're getting divergence in, here's the sells on the 1 hour euro dollar. Of course, these sells are becoming fainter and fainter and less profitable as the market starts to slow down here. And the moving averages go sideways and they get choppy and all that stuff. But here is and you'd have to do the 2 to 5 period count, which, so the Akel Stokes guy is counting this as A, B, C, D. And that's interesting. I always thought from the Elliott wave world, it was more like this. You're counting, say, A, B, C, or 1, 2, 3 is the biggest wave. This is wave 0. He's counting that as 1. Well, that'd be 1, 2, 3. 3 cannot. So ABCs, typically the letters are used for correction in Elliott wave. So in an Elliott wave, there's 5 waves up, 3 waves down. The pullback is A. This is A. This is B. This is C. There is no D. There is no D. I guess they added another note to the scale here. That's how you're supposed to do it. And I don't know if the Gartley guy, who's from 1920, he wrote down, listen, I know about Elliott wave because both these guys are alive around the same time. I'm not going to do that. I'm going to count differently. It doesn't really matter how you count this stuff. The key thing to understand is all the signals that you see that, and I don't know why he doesn't see these. This is the 4-hour euro dollar, by the way. I'm looking at, just forget the RSI for a second. Forget the wave count. I just wanted to, of course, I have problems doing these videos because I guess there's so much I want to say, and I see something and I want to jump to just go and highlight that issue. So let me just go back to just the raw data here and just put this trend line in here on the tops. Now there's 3 touches on this trend line on the 4-hour euro dollar. Notice the fact that after precisely hitting in this close Eastern Standard Time at 1, 9, and 5, 1 a.m., 1 p.m., 9 a.m., 9 p.m., 5 a.m., 5 p.m. Perfect touch. We find support after breaking that resistance. This is the lowest risk entry. Another thing on this video, he says, what does risk-reward ratios matter if you don't have a winning trade? Well, how do you know you have a winning trade? You don't, okay? I don't know how this guy thinks he's so good at trading, right? Who is that good at trading where I only take winning trades, so I can actually get by with crappy risk-reward ratios? Does this even pass the logic test? This is so illogical. I don't know. See, that's the problem. And now these people have a bunch of viewers, a bunch of, maybe they have experienced traders watching, like me. I've been trading so long. I've done so many trades, I can't even tell you. Risk-reward ratios are so critical. If you're risking 1 to make 5 and you overtrade that account, and I think we always try to tell people, listen, if you start shooting at windmills, you're going to blow up the account, because just because your risk-reward ratios are killer, yeah, but you know what? You've already figured out up front how many times you can press that button before you blow up the account. That's a math number. That's not a pattern or a Gartley or a Batwing or a Cipher or a, I'm waiting for the guy to come out with the insect system where it looks like a beetle trade to me. Oh no, I think it's a giraffe entry. I'm going to get at the neck of the giraffe, and I'm going to come in and get out at the feet. These are all these things that you project onto the market like a Rorschach test, and you're going to create all these stories to justify your position and even blow up your account that way. In the patience it takes for this market to chatter and go sideways here, I can hardly stand it myself, right? I knew we were going up. Another thing is, you take this line, you copy it, and these guys don't use channels. They do this advanced. I love the fact that you have advanced, the right to put like synthetic oil in your car. This is better than regular oil. It's advanced. You go to Advanced Auto. In the States, you go to Advanced Auto, get your car fixed, right? Who wants to have some, oh, this is legacy, old school. I know it's vintage, it doesn't work, but it's so cool and hip. But everybody's seeking advanced. Just realize you're being sucked in to a way of thinking that is not even logical on its face. If you were to show, and I'm going to get some traders, people that don't even know what the market is, they will make more money than even me, because you know what? They don't have any preconceptions. All this confirmation bias, all this, when you're analyzing people's ability to think clearly, everybody's bringing some bias to the table, right? And so you've already got, you're primed. If you're primed to think, this, if-then statements and stuff like that, you're already boxed in. You've already painted yourself into a box. How can you possibly have a beginner's mind? This is how you get through life. If you don't wake up every morning and say, am I completely been doing this wrong? Like, you have to check your premises. This is like Ayn Rand basics. Check your premise. How do you know what you know? It's called epistemology. How do you know what you know? With the fact that you have YouTube and the internet and pretty Gartleys and all these, this is all this is mystic stuff. And sure, this guy can be right, just like a stop clock. And if there's no AM PM on that clock, he'd be right twice a day. His risk-reward ratios have to matter. This poor guy here into this video is asking him, I'm trading risk-reward ratios of 1-to-1. I'm thinking of tightening up my stop. Okay, this is completely based on, who hasn't done this? It's based on the fact that I don't want to get stopped out. I'm right about this trade. I'm so right about this trade. I can put my stops at break even. No, you can't. If you're a person that trades a lot, and I wouldn't say over trading, but like say you drive over the speed limit 10 miles an hour over all the time, yeah, you're eventually going to hit somebody or get a ticket or whatever, right? It's a high risk lifestyle. Trading with 1-to-1 ratios, right? And I've written scripts like that. I've done trades like that. I've written market orders that are just, I'm looking to scalp 5 pips. Guess what? A scalp can turn into, if you keep moving the stop, now you're a position trader. It was supposed to be a scalp. Turn into a whole drama, right? Okay, so I'm going to bounce back to this chart. Now, I don't know why these guys don't do channels. Like, if you're going to do advanced supposed trading, establish a time channel based on closing prices. And he's got so much data scrunched into this thing. You cannot see nothing. It's like an aerial view of the planet Earth and say, oh, can you see my house? No, can't see your house. So, take it from copy this line. In MetaTrader, you highlight this, hold down the control key, And as soon as you highlight that and then drag it over, it'll duplicate itself. Look how this thing touches perfectly on this lower channel. Now you could have to create like a offset Andrews pitchfork to pick up this other close. All these things are important. All these prices are important. This is Sunday night. We don't need to look back 3 years. It doesn't matter at this point. We're not in that section of the trade. If you go to the monthly, you're in the middle of the pool. You're at fair value. You're in the middle of the story. That stuff doesn't matter now. It mattered down here when you were coming into historical prices on the monthly. Yeah, but guess what? Guess what this is? And this is a link I put in. I'll put the link again. For these people that don't understand how these markets, they're auction markets. They don't know about your RSI. The market doesn't see your Gartley. The market doesn't know you exist. You're nothing but, this is nothing but a Rorschach test. And if you've been brutalized as a child, you're seeing nothing but like a wooden spoon that's about to hit you in the ass here. Right? You're projecting on the market. I mean, I'm hoping everybody's familiar with Psychology 101. It's called projection. You see what you want to see. And, you know, typically, that's just kind of this trap, your mental trap. You can't see yourself outside yourself unless you really practice watching yourself outside yourself and catch yourself, right? You're trying to catch yourself before you do something dumb. And when you're in a trade that's going sideways, say, and you know that the eventual moves up, and every time now, since I have separate accounts for separate trading styles, I noticed immediately that I had to have that because I needed to scalp out of some of these trades. I'm like, this trade is going to take hours to complete the or break out of the congestion we're in. So why not just get the hell out on something here? Just bank it. Just keep scalping in and out, in and out. This is going to, if you believe that you can wear different hats. I mean, I studied this. I've spent thousands of dollars on this crap. I'm telling people for free, right? Nobody cares, right? I have a small, at least I got people watching my videos that I'm thinking I have much better viewers than the people that watch Eagle Stokes. Because anybody who watches Eagle Stokes is like, that's ever traded just says, you're kidding, right? So I guess I have the cream of the crop of viewers. Because I meant the quality, not quantity. Like if this one person watches my video and goes, you know, I never thought of that. I'm like, thank God, right? Because, and when I do the video, it only proves to me, yeah, I think that this is another way to view the market without getting caught up in these cliches of, oh, I got MACD running. Yeah, you know what? If you love to get in on lagging trades and get trapped and be the last guy to get in that trade, okay, it could have made money. In fact, when the market violently moves and you have a tight stop, you just made a bunch of money. But when you take the same technique to a quiet market or a different dynamic or a different pip range, you're getting clobbered, right? And anyways, we'll go back to this. Let me go back to the 4-hour time frame here. Now, this would have taken all week for this setup. And another thing is that Wednesdays, since the swap is going to come in on Thursday, a lot of people, Wednesday is a big new low swing, hammer on the daily, doji. You're seeing the wick, and I can go back to last week, same story. Wednesday, no, the middle of the week is right. This is 4-hour chart. So the middle of the week, look at this wick here, big smash down. Look at this wick, Wednesday wick here. It's right in the middle of the week. The swaps are going to come in. Look at them hammer that wick into. What is the hammer into? And I don't know why this guy hasn't caught on to my trick of the 1 period moving average. What is the hammer into? You have a pending order there. You just cleaned up how many pips in how many hours? About 150 pips, right? This is the, another thing here is, of course, we all know psychologically the 100 pip and the 50 pip handle are way more important than any Fibonacci tool or any ABC Gartley advanced pattern up the sideways channel, you name it, blows it away. It blows it away for a lot of reasons, and it's the simplicity. Nobody wants, people think because it's a complicated game, we need complicated tools. Not so. I mean, they've done that with cars. I mean, there's so many sensors and so much garbage on the car. I pulled my mass airflow sensor off my car. It's garbage, okay? It's looking at the computer. The computer's trying to manage. I mean, you've been on, everybody's been on the internet, right? Or you may be watching, you go on the internet, right? Everybody's trying to help you now. You go to type something into something, it's going to self-complete for you. No, leave me alone. You're in the store. Can I help you? No, you can't help me. You know, everything's guided on a path now. It's ridiculous. Anyways, here's the 4-hour. I'm going to show you every sell on RSI in the 4-hour. Now I've zoomed out. You can still see the clarity of RSI momentum sells on here. I'm just going to quickly blow through the 3-period RSI. I have a 50-yard line here. So I right dead center. And you're looking for divergences, and if a divergence fails, you're looking for the continuation entry. So just from the left side of the chart here, the first buy on this chart, believe it or not, is right here at this double bottom. Why? Because if you look at the RSI and compare that to price, we're looking for the inversion. This low, and I do have it on close this time. Let me just change the color of this thing. But, you know, I get up on this Saturday morning, go to the internet. I'm like, what buffoonery do we have in front of us? And every time I see this stuff, I love it because I learn something that, I see what he's not saying is just so like a gold. This is a gold mine. You see this price is lower than this price, but this is more oversold than this higher price. You're already in an uptrend, right? Anybody, and I don't, you can look at the whole data set. You're going to make yourself crazy. That's like shifting time frames. I just watched one with the guy that trained him how to do all these silly trades, Jason Stapleton. Same. How haven't these guys stepped back and looked at this stuff? But they're transfixed on advanced patterns because that's their selling point. I guess this is how they make money. They make money by selling courses and, oh no, don't do that. And they're so strict, inflexible in their approach to not having a beginner's mind. You have to start off from square one. You should be able to explain your trading system within like 10 minutes to somebody. This trading is not complicated. It's all the fear and stuff you stack on top that's complicated. And I trade blow by blow. I don't trade stuff that ain't there yet. Why would I? Right now, what's the trade? Sell. It's a sell with a stop here. Right? That's the first trade out of the box. You can say, that's just a bad, I don't see a completion wave. I don't see, who cares? If they stop me out, I put a sell limit here with a stop here. In other words, just trade after trade. But I'm not going to put a sell limit here, and I'm going to take profits here. I'm going to put a buy limit down in China. I'm going to get out here. I guess. I just watched the latest Stapleton video they did last week. He starts out the video. He says, I waited forever to get filled in this trade. Well, that's not going to work for me because I can't wait forever. Okay. Once again, sidetracked. Here, let's go back to the beginning here. So I'm going to pick out every entry here, and these are real entries. Like, you can take these trades. And another thing, no mention of volatility ever with this guy. When he sees a wick, he just described, I've looked at wicks lately. Huh? What did that tell you? What story did a wick tell you? Volatility reversal? Should have got in there? Okay. How is he missing this? When I first saw a wick and they trounced me, I said, oh, man, that was a huge reversal. Who's not getting on that train? Even for a little bit, just to test drive it. You're not even risking, if you're risking 30 cents or $30 or whatever your threshold for pain is. Okay, so you draw the trend line like this, you see this. In fact, right here is the Andrew Cardwell and the wave count. This is zero wave. 1, 2, 3. That's a 3-period reversal, the most powerful reversal there is. This one's a little bit like a 5 or a 6. Another thing this guy does, I don't understand. He's counting this. You go to original Elliott wave trading. This is wave 0. This is 1, 2, 3, 4, 5 completion. Then this is 0. This is A, right? This is B. This is C. Why is he putting in? He's starting off like this. A, B. No, you can't count A. Elliott never did that. Maybe Gartley counts. The trick Gartley came up with, hey, let me just make 0 in Elliott wave 1. It's a 6-wave pattern. No. An Elliott wave, in other words, the problem with Elliott wave is that there's extensions. I don't do Elliott wave just because why? When RSI is smacking you upside the head going, please buy me here. We're oversold. We're more oversold, but at a higher price. So here's your first entry. Another thing is he doesn't mention volatility or the fact that you could place buy stops on these closing fractals. Or the ideal thing is to wait for the market to quiet down. Big burst out of here. Huge move. Where is the next buy? Well, actually, it's right here. You can kind of how to see this. If you're zoomed out too far, you won't see it. This valley to this valley. Look for price. What is price doing at that point? I'm pretty sure that's an entry. Okay, this is not going to ride along. So this is not the best trade in the world because it didn't do too well. But it made some money. If you look at vertical, it's kind of hard to see unless you vertically key this. So where does this end up in price? And actually, now if you're going to push a indicator hard, like he's saying here in this video, don't do aggressive trading. Why not? It's like, I mean, come on, man. Be aggressive, be subtle. If you're with a girl that likes to be beat up and, 50 shades of blue, black and blue, like if that's your date, give her what she wants. If she wants to be with a candlelight dinner, right, you know what? Don't whip out the wooden spoons and paddles. Treat her nice. That's what she wants. So you have to adapt to current conditions. And I'm not. My disclaimer is I don't encourage spouse abuse. But look at this. Compare these two valleys. You have to track down the other valley. It's right here. This low compared to, let me just put the vertical. You slice it this thin. So I'm looking for the matching that pullback. It's more oversold at a higher price. Now, that trade totally failed because once you're outside of the, once you're screaming this hard, although you could say that wick there, it really can't see here, but we actually spiked up there. It went up. The other entry here is the entry here, which is, you could also connect a trend line off the last known signal you had. So as you come into this, now you can draw channels on RSI. And this is the big secret. So this is more oversold here, and this here is just plain old top-bottom theory, right? Top becomes a bottom right at that doji. You enter there. You're right at the round handle, too. More oversold than this. Projecting off of that down here. So you're looking at this original. So just put this trend line in here. Here's your original pullback. There's your launching pad. And even if you were on the left side of this thing all day long, there's signals here. More oversold, higher price. Buy. All right, more oversold. Comparing these 2 points here, and this one just cut by. And as soon as it starts dropping below here, you can start buying. So you start buying into that because this is higher than this price. So when this falls away, momentum dies in an uptrend. Start getting in. The next chance to get in is on this like 3-period reversal and this one. Here again, another buying. Every pullback that is lower than the previous support level is your entry. It's that simple. So you mark off all of these, and you know how you back test this. Just look at the damn chart. Just look at it. You see, right? So this pullback here, now we're looking for another pullback in price, but a bigger pullback in RSI. What's the next juicy trade on here? This is kind of about if you do the wave count here, and gee, did it turn? Okay, this is Okay, right here. If I count this as 0, this candle, so this is 0, then you have 1, 2, 3, 4, 5, 6, 7, 8. But notice the more oversold, higher priced. Project off the highest close within those two lines. Target hit. Trade's over. No need for extrapolations and, oh, got a bat wing here. I'm looking, my 618 off my fib. That is all just insane. I don't know how people do that. As soon as you break out that fib tool, you've taken yourself into a realm of, like, say you're out on a dinner date with some girl. And it could happen. And you're there with her and you break out the specs on your car. You know, girls usually are, you know, as long as the car's rolling and shiny, they're into it. You start showing her the compression ratios on the car, she don't care. Market doesn't care about your fib tool, trust me. And when you say, people say stuff, well, you know, that's all the big, you know, oh, that's why it's not why. It's just you can watch a market come into a resistance zone. We all know what resistance is, right? This horizontal line I threw up here at the 25 handle, this is the pivot. In closing price, bottom becomes a top. Then guess what? It becomes a double top. And once again, this slow meltdown. So here's the last buy entry, RSI. You bought here. Next time you see it oversold. But the problem here is it's not at a higher price. It's already fallen apart. It's already down here. This is not an entry. This is going, these guys are moving together. There's no inversion. The inversion's dead right at that point. And besides, people have already gotten in on this divergence here. Like this is another thing what Andrew Cardwell calls a hidden divergence. And what that is if you draw a trend line on the tops of RSI, now you kind of got to drill down here. Even on 3 period, you can see it. If you draw a precise, you can see the first divergence up here. Now look at how these key in. The hidden divergence means that if you take RSI and you precisely, I wish it would just auto draw there, but this is happening underneath that divergence. The first divergence for sellers, now you can trade this both directions, is that you could have sold this divergence here as it was coming up and you made some money. This divergence is happening inside that other one, which means it's really folding over. In an Elliott wave, this would have to be the total end of 5. Let's see if I can zoom out to the look at the top, how this happened. This would be wave 5 for sure, but it's happening right. Our size is it's a step ahead. So if you consider the so you have this choppy thing here, it's diverging. There's nothing more to that. We're already, so if you didn't sell that divergence, and divergence do work because when the market gets the final capitulation, either up or down, and usually it's going to be a few waves to get to that point, you're going to see it. Now, you can also treat RSI as if it is price, and you can see tops become bottoms. You may not want to get too carried away here, like this double top, this double bottom became a top in RSI, and that was the killer sell. It runs ahead of actual price because it's indexed on the last known move. Now, there's no more buy signals in here that qualify. And once this thing rolls over, you have a 2-period reversal here, or you have a 3-period reversal here to sell. Let's see if I can zoom in here to start to drill down on this. Now, as this thing goes down, let me just start now. So that was the up thing, and everybody was getting in on those reversals. Now, as soon as this thing RSI goes down with price, you're looking for the first place to sell, and the first reversal that jumps out at me is look back at this peak in price, this pullback here just before everything come unwrapped and you go crushing down. Now draw a trend line from RSI peak to the right. And if you can find a place to make that go up, you'll notice this perfect, and it doesn't get much better than this. First sell. More overbought, but now at a lower price. So the market is taking a breath. The the RSI relative strength, the strength is higher, the price is lower. And a lot of people that bought oversold are not getting the follow through they want, which is what really causes a setup. So this compared to this price, if you sell here, you find the lowest close within there, your target should be way down here. Of course, you don't hit that till you don't really after you hit that, but this is the better signal, is the tighter. Sure, you have this, but this one, wow. Find the lowest close in there, project off of that. It's not a big trade, but it's a great high. I mean, the market's subtle, you know. So he says in the video, the market's subtle. That is the thing. The market's very subtle. Like I say, when you're out on a date with a girl, you know, presupposing that you're a guy, and every subtle little thing, you know, you're paying attention, serious attention to clues, because you want to know whether or not you should just go home and watch a movie, and with or without her, and that's very critical, right? And you're always looking for a chance to get a reason, and you're actually waiting for the close of the 4-hour bar, and that would take some patience, right? So you're waiting for the whole date to finish out 4 hours with her, see if she's really retarded or if she's going to be somebody you can have a conversation with. Now, because, you know, just because you're good looking doesn't mean that you're going to be able to argue politics with her. Here is another sell. So all of these qualify. Every time the market's more overbought, price is lower. Okay, project off the lows. Another sell. Only on 3 period. 3 period is very sensitive. Here, very subtle. Here, another sell. Overbought. Another sell. Based on this, but not based on that. This is where you're starting to lose ground. You're not seeing the 2 period quick and dirty moves. Now it's getting long-legged. Now you're like, you know what? And what is typically the cause of that reversal is a failed response to divergence and momentum. If you're looking at the fact that the other side of the story is, who's buying this? Who's causing these failed rallies? Well, the momentum of the divergence here. So when you see these divergences, yeah, these are buys. You're looking at that, and this is unfolding in front of you. This is trading in the moment, bar to bar. Here is a really powerful divergence because it's actually a very quick thing, and it's engulfed in here. You're getting divergence causing these failed rallies into previous support. These are gimme trades. These are not a lot of pips. Not a lot of pips, high probability trades. Another divergence point, more, right? Complete failure, and here is the kicker. This divergence is the setup for the, this is the cause for the effect of the reversal. Then kablamo. And of course, the breakout traders that just sell here, and this is why people like Akel Stokes and Jason Stapleton can make money, because what if you sold here with a stop here and you have a break even? You made money. What if you held through this whole thing, this whole meltdown? You're like, oh, we're so good at trading here. We know our stuff. But I don't know who's able to wait 3 days for the completion of their miscounted patterns. This monster move, right? And this could, you don't have to use RSI. You can just go with good old-fashioned redneck trading, which basically is stuff like bottoms become tops, smash. Oh, the buyers didn't come in here like we thought. But look at the divergence, kind of a divergence that caused that setup. So you get the divergence. Not really, this would have closed, had to close down a little bit lower to get true, but it's divergence. Come on. Double bottom with this coming up. Not much of a, you would expect. And of course, if you were looking left on this, you could make all sorts of arguments. Well, I'm at and all your fib arguments, just throw them out the window. If you're going to put RSI on the damn screen, trade the damn thing, right? There's your sell. Then you get another divergence, another reason to cover, take profits, or even buy for a slight dead cat bounce or dead puppy bounce. They look different. And here is divergence again. Now here are triple sell, but this is where it's not about pips. It's about momentum entries. Triple reversals. Every one of these rallies, higher strength, lower price. Higher strength, lower price. Find the lowest close within there you're projecting here for your targets. Now, this divergence finally kicks in. And if you're looking for the break of RSI trend line to find entry, here's your entry on a break of RSI trend lines to get in. Now, here is the first failing reversal start about, okay, now you're going to say, look at more overbought than here. And it is comparing these two, you're like, okay, that's my sell. Problem is that this doesn't go on forever. Trends don't go on forever. And at some point, you are going to lose a couple pips here. And if you're always trading divergences, realizing that, it's okay for the momentary few pips, but then you go into sell mode. So if you're bidirectional trading or you want to be always in, you're going with what's this market. You basically are just doing what, even though some of these trades aren't great trades. And of course, for our chart, this is a week of nonsense before the big monster sell-off. And so to buy this rally going up, there are no entries, because if this is more oversold, so is the price is lower. There's no reversal here. If you go to the daily, you would see possibly a monster, very tight 2 to 5 period reversal. You can't have a 1 period reversal because I'm not counting 1. I'm counting 0. This is 0 bar. This is 1, 2, 3, 4, 5. Can't count. Just noticed that after watching all these Gartley videos and all these Batwings and ABCD. It's an ABC. There's no D, right? Some guy was like, how are you going to count? How are you going to count this? And that's also a mind trap too. Now here, if I could go to an 8-hour chart, which can't in MetaTrader and MetaTrader 4, but you can run MetaTrader 5. If you're an RSI freak, you can run MetaTrader 5 and see that basically in the big picture, that, and of course this would be the best entry is when you get divergence in the direction of a trend. Oh my God. Then the wheels come off. Typically the market is, you don't see, it's very rare setup. In other words, kind of getting divergence here. This is failure swing, getting divergence, and you're already going down. And here, if you're going to draw from here to here, still no reversal. But if you look, let's see if I get one. If you go out to the, just look up here to see this price. So if you compare this price and put a horizontal line on RSI, so you're gonna pick this price out. This is just before everything came unwrapped, and put a horizontal line in here. You'll see that this is more overbought at a lower price, and that's a trade right now. This is a long-legged signal, but all these are sells, and the first sell is here, and you're really not getting a you're getting a more overbought or lower price here too. So, but these end up stopping you out and chopping you to death. And for the conservative entry, you would have your sell limits here, but you never got filled. If you put them on the wicks, and I think I did this last week, this was the entry right here before the big sell-off. It did come back in these wicks. And that's, but that window there, I wouldn't just trade one position either. And another thing is that how you get in these markets is just as important as if you even get in the trade. So if you're running a trailing sell stop here and you're waiting for a quiet candle, yeah, your sell stops would be on the baby candles if you're stop entry, but you're already trapped in the trade. It's better to just pull the trigger on the clock if you're really trading RSI. So you literally sell. Every 4 hours, there could be a setup double bottom, pullback. Here's kind of a reversal, failed rally. Okay, when it goes choppy like this, it goes choppy like this, too choppy, go up a time frame. You know, if you can go to a 6, 8 hour, 12 hour daily chart, whatever platform lets you get in those, but you don't want to get too carried away with that. I've been there, done that, and you can get caught in a, overanalyzing this thing. Just go to another pair, but I'm just trading the euro because I need to make a living. I need to make money trading. I cannot manage 40 pairs. Even though it might be the best setup you ever saw in your life, well, it's one trade and you focus all your energies on that, and you can't hardly scalp while you're, like I said, you'd have to have a laptop computer where you place your trades, close the laptop, never look back. Because if you're looking at this thing and you're up 300 pips, who's not getting out, right? You're up $3,000 or $5,000 or $1 million. Who's not getting the hell out, right? You can see that that's a momentary blast. It's going to pull back. This market can be very spastic, and then just everything's just gone. Now, the next entry here to sell is you're looking for a more overbought RSI in a, and here is your next signal. And so there's a lot of trading on this thing. This isn't really qualified, but this one, better to have a very tight zigzag, another sell, find the lows, close, project, another sell. As this channel keeps going, every time it's more overbought, another sell. Problem here is not really good setup because now the RSI and price are agreeing. You're not getting the inversion. You're not getting the reversals. You're not getting the anti-divergence. You're not getting it because at this point here, you're just plain old running out of sellers. And some of this stuff, that's why I call the video channel Simpleton, because some of the stuff is so stupid simple. I mean, a child would look at it and say, well, it doesn't look like it's going down anymore, Daddy. Oh, yeah. Thanks, kid. And I was just such an advanced pattern trader. I didn't have a clue what you're talking about. I get it now. And here is the premium entry just in trend line analysis. Also, this is failing. This is way overbought. This is not at a lower price. The bulls are starting to take over. Plus, if you look at the underlying divergence, all of these are divergences that failed. This divergence was the setup for this sell. You get divergence, then look for reversal. Divergence, reversal. Now, in the 4-hour chart, if you're looking at this from the left, this was the big resistance. You broke through, you came back, found support. If you treat this like price, you're getting in before everybody else. This is your edge. You're not going to get this pull back down to here. In fact, when the news came out Friday, if you're looking from this pivot to here, in the other video, I have the auction link. It's an auction market. You can track this momentum in this RSI, these closing momentum prices, but in the end, when this market comes back in here, it's all about coming in, filling that void, and then ripping it up. Filling that void, ripping it back. Now, you can see a whole, this is what causes one of these dojis where the body's this big, and it looks like this. And people are like, what the hell just happened there? Well, when it closed at the same price it opened. Well, they went and filled all those voids, all those orders, and the market satisfied itself. It found liquidity, and it was done. It was satisfied. The alligator ate the mice or whatever they eat, and it's over. Now, what to do now? Right? What to do now? So as you come up into, I can't get a drawing mode to save my life. You come up here. Sellers are coming in here, obviously, and the sellers came in here. If you had sell limits for your take profits, or maybe you scalped this psycho spike here. But if you look to where they take it to, take it back up in this congestion zone. And it was pretty furious here. If you go to the 1 hour chart, take a look at this hammer. This is a 75 pip hammer. This is pure auction here. Now I'm going to do the RSI in here, and then I'll leave you alone. I won't torture you anymore. But I can't hardly. They say they used to say years ago, if you see something, say something. Yeah, I'm getting lost in Gartley's. I mean, it's just Gartley on the brain, and it's advanced pattern. There's no advanced pattern. The advanced pattern lives in your brain. You can show me after the pattern's gone. Hindsight is 20/20. We've all heard this. It's true. You're just fooling yourself. There's no advanced patterns. Oh no, I see a bat wing. Okay. Are you reading the tea leaves out of your coffee cup in the morning? Of course, you have the teacup. Are you reading that to plan your day? Okay. You probably think that they faked the land mooning. Oh, okay. Yeah, you believe in chemtrails too. Oh, okay. Yeah, we're going to break up today. I don't know you. Don't call me. Just unlisted my phone number because of your mindset. Now, look at the 1 hour. Now, this is going to be a lot more chance to, as this guy says, blow up your account. This guy's full of it. Nice guy, completely clueless. Look at the 1 hour setups. Now, this is a little more high frequency trading, but look at the RSI here. Man, what do you think about this entry? Now, the market's already zoomed up. Is there a chance to get, and if I just put the 50 yard line here to filter out, I'm only looking to buy for below 50. Is this a good trade up here? I have to do a little marking on the chart, but even this wick here, hopefully you're out of the trade before the news came out. If you were trying to play this drifting up pattern or drifting up situation, I don't want to even use the word pattern because you can use the word pattern. I mean, people are pattern. Human beings are built to identify patterns because if you see a spider, or a snake, you're gonna just key to that, right? You can just feel it almost goes right to your mind. It doesn't even go through your filter of consciousness. If you see certain patterns, say you look outside and all the trees are upside down, this would be a pattern that would be disturbing. This is a pattern that would all of a sudden get you in a certain state of mind. So pattern recognition is a survival tool. So here is a key point, right? This is where everything started, the party started. Now, if you're waiting for the market to come below that for your entry, start buying as you get the first reversal, which is here. Not a great trade. This one, a little bit better. It's a very long-legged pullback. Of course, when the market takes off like this, so you got it here. This is not really but you're staying in that trade. That pullback was, there's not really a divergence here. When the market's screaming up this hard, even in the 1 hour, not an entry, but here was your entry. More oversold, higher prices just at the close of the day here. But I didn't take this trade because I knew it was just an 8 pip trade. I mean, I was like, if this is going to be a winner, it's going to make like 8 or 10 pips. So I'm not interested at the end of the day. And the spreads start to, depending on who your broker is, start to get wide and messy, and it's just too risky. But look at this. This would be if the market was still open. And if you just got, another thing is looking for the small candles to get in. Small candle entry. And this is a tighter stop. This is better risk-reward ratios. More oversold, higher price, enter. But this looks a little fragile. And this is, like I said, all the drama's over. Now this wick here, you'd have to track that on a 5 or a 1 minute chart, but you could see it. So if I go to the 5 minute, and if you're really able to trade with that, you're going to wait 5 minutes for your entry. Boom, hit the trigger. You can see the setup within that wick. Now that wick's got a hole. And the thing is that unless you really have a strategy for these wicks, and you're going to trade auction theory where they basically take it to unfair value underneath here, which they did a baby unfair value auction earlier where they went unfair for a little bit and they came up to fair, went through fair. Here they went unfair totally and then took out this whole thing and went, what did I say, initiative mode there. So if you got in here, you dumped on your scalps here, and then you held, you're a genius, right? You got money. And So here was your own reversal. There was really no divergence that gave you that pullback. Now go to the, if I can able to go to a smaller time frame here and look back into what happened on the 5 minute or even the 15 or the half hour here. On the 15 you might have seen it. So if you're able to jump on some of the, take advantage of some of the things, the 15 minutes is kind of almost a doable time frame. Here, the big sell-off in the, when the news came out. Now at this point, you'd have to scrunch out to look for the low. RSI is spiked to like insane down here, so you can't really. You'd have to be on the 5 minute. So sadly, you'd have to be sitting here and. Gosh, the only place to get long is this big. These are going to be extended because you're on the 5 minute. Oversold, higher price, buy. But all the drama's over by then. Here would have been, you don't see it. You have to go 1 minute chart. You have to be on a 1 minute chart for that. And when the market's moving that fast, that hard, you're not going to see a pattern unless you're on the 1 minute. And that's just how it is. You're not going to see a chance to get in this thing. I have to zoom out and hopefully I can decipher this 1 minute. If you look, and now, let's see if I can zoom in on this portion here. This is slicing it thin, but it does exist in here. If you look at this, this may take a little bit of, see that pullback? That's referenced off of this price here. If you key that bottom, so what you're looking at here is, I hope this isn't going to auto shift on me and screw up my thing, but you're comparing this pullback on the 1 minute chart. There's a whole bunch of signals in here. And unless you're able to jump, unless you have the 1 minute chart running, you wouldn't see this. And this would be a high probability. You can pull the trigger at the market. You have 1 minute to pull the trigger. 2 minutes. You're probably going to trade at the market, or you could trade very tight stops and limit entries right around current price. More oversold, higher price, find the highest close and then project off. Even in here, if you notice, top become a bottom on the 1 minute. This big pullback here, higher price, right? Find the highest close. So, kind of, you got to be a little quick on that 1 minute. Here, big oversold, higher price again. This was your launching pad. Everything's built off of that launching pad. More oversold, higher price. More oversold, higher price. Big, like this is when the news came out. And, so you would have had to wait for here to get in. I don't have a 30-second chart, but the 30-second chart probably might have had a double bottom here, or even the 15-second chart. So how thin are you going to slice this puppy? Because that's the question. But it's all about that, and this is about that. That's about this, and I just wanted to say this about that, and I just really, I just say question everything you know. Start from square one every day and take a look. Ask yourself, do I want to get involved in Gartley patterns and all this nonsense? Now let me just take a look at the daily here, and so I'm going to do a weekly wrap up of the other currencies and how right I am about the Australian dollar. Oh my God. And crude oil is just, it's like, yeah, you can be right about a trade, but if you're in too fat, you're tight, your stop's too tight, there's all other sorts of things that can totally screw you up in trading, which should be into big, not in diversification and price entry, and just it's a bottomless pit of how much stuff you screw up. And look at all the sideways chatter in the euro dollar here. No signals on this. The only signal you get here is this monster divergence up here. Big just put up like the Gann grid, which is like psycho complex. Start over here. So here is the monster divergence in the 3 period RSI. Like people, yeah, divergence works, yeah. And wow, monster sell-off. So right now there is no signal daily. There's nothing. even on the 3 period. So where was the sells here? This should jump out right at you. Usually only zoomed in this. Usually you always see it with the moving average at a 1 period, which aligns with thing. Okay, divergence. You're looking for a positive reversal. You're looking for it to be more oversold at a higher price than that. That was your entry here, because if you look down on the price, let me see if I just finish this off with the and these are very steep entries, and you will see this on a 14 period RSI, but you will not get the signal entry. I want to get in. I want to get in as tight as I can. I don't want slop. I don't want to be playing my steering. I don't want to be playing the camshaft. I want tight. RSI is 3 period is as tight as you can get. This low, and this will just be the same thing you see in a 1 hour, right at the 50-yard line. More oversold, higher price. Project off these highs. Never made it, but a couple bucks there. It came up into here. Obviously, this is a big problem, especially on the daily. Very important. And is there another entry here? Yeah. More oversold still at higher price than that. Buy. More oversold. Not really. There's nothing on the other side of that. And divergence wise, sell, divergence, sell, divergence, not really. This is actually agreeing with price. It's going higher. If you were on the 4 hour, this was the big entry here, right? Pulled back. Without overdoing it, overanalyzing, over patternizing these things, and over advancing your patterns. I mean, advanced pattern, it's bad enough you're trading patterns to begin with. Because volatility, if you call that a pattern, is about, say the market's dripping down like this, and you just kept putting in sell stops. You don't have to trade reversals and climaxes and wave counts. You can just trade like a whole system built on market's quiet. Okay, I don't know which way it's going. I'm just going to bracket it and just let things unfold into my order banks. Like this, is doji, sell. You have a trailing buy stop. Yeah, I'm making money. Yeah, I'm not doing too great. But you're making money, right? You're going, you're just going with it, how it goes. When the market heats up like this, you giant wick, you step back, right? And there was the divergence up here, and you're looking for the first reversal, which I guess without, you can almost see it here. If you look at this flat spot, and you can only really see it if you're zoomed into this level. When this thing went flat here, where is the price when that went flat? Right? What's right support? This is a reversal. You never get them to bid it up to give you a peak, but you compare those two prices, right? And this, you didn't get it. But you, if you look at this price, compared to this price, that's a 3 period reversal. That flat spot is that doji. More overbought, lower price. But it's getting fainter and fainter. Now, in the big picture, where is this price? This price is higher than this price. More oversold. Buy. I do think the euro's going up. I go to the weekly, and I'm just going to close the weekly. And I would say setup instead of pattern. Setups really give you an entry window. Patterns are very speculative. I mean, advanced pattern where you're going to put these way out in space. You're going to put these the tip of some batwing. It's ridiculous. You can tell me, oh, makes money, but you notice, go back, and of course I've watched almost every one of these empowered tradings, called disempowered trading, almost like I don't know, this does happen in a lot of stuff, music. There's this kind of inversion where you start losing ground. Stuff does not get more sophisticated, and it becomes mystic. And I know a mystic, there wouldn't be palm readers if there wasn't people who believe in mysticism. But I'm not a mystic. I'm just a boring realist, and I don't see the point in all that speculation. Now, if you go to the weekly, look at the big picture here. Not a lot of signals, but now I have to zoom out, I guess, to see where we're at in the big picture. Just ensure points of we're at fair value right now. Does this thing look like it's about to step up to the plate and rally? I think so. Of course, this could be. That's all it's got. It's gonna tumble down. Not really any kind of anything you can say here about RSI because you're not going to get a signal. This is zoomed out, and who's trading this zoomed out? The only signal is here, and I did it in another video. Here is a sell signal and sell signal. More overbought, lower price. That was your only really killer entry here. The rest of this is just sideways nonsense. Here, more oversold, higher price, project off the highs of that, and that's giving you the target. This is what the Andrew Cardwell told me is more oversold. Buying the highest close within there, didn't make target. Did go up though. Here's a 2-period divergence in a downtrend on the weekly. That's a good buy. Not really getting this sell off to get that, and this is really there's the first sell on this down smash is unfortunately over here. No chance to board that train on the 1 hour. Is this? I mean, weekly. When this thing starts to go down, buying oversold here, you're going to get killed. The only way I would buy oversold is if I saw divergence. And so just because RSI is rock bottom, don't mean it's wow, it's really ripe for the no. Because they just keep that doesn't in the market certainly doesn't see RSI, and the market doesn't say to itself, you know, I'm so oversold, I should bounce a little bit. It's not. It's you're looking at crowd behavior. Could you have bought this double bottom in RSI for a bounce? I guess so. You did pretty good, like a couple pips there. But even this. Now, if you were to go for advanced, I call it advanced trend line, or support resistance on RSI, support becomes resistance on RSI. You could have taken that sell. Now, if you saw a 2-period reversal on the daily here, you definitely take that. So you could sync that up. But it looks to me like we came back to my entry point. We scared a lot of people out of that. The market's not always going to come back to your precise. And markets typically overshoot the runway, especially if there's a lot of momentum involved. Everybody's looking to buy here. No doubt, right? Previous top. Well, you know, there's 3 tops there. So which one did you buy, or did you buy them all? Did you load the wagon with a stop down here? You should have, right? Are we eventually going to go after this wick? Yeah, this year, this summer. First, we got to get above these closing prices, but it's not in a straight line. There's plenty of chances to get long this thing. I'll be buying this thing when it pulls back on the smaller time frame, or just pulls back 50 pips. It's not even about time frame. It's about how many pips. How many pips deep? If you go to the daily, what's the entry here on the daily? And you don't need all this garbage, right? And these 2 dojis here, another thing in the video that he points out is that he's looking at candlestick patterns. I'm looking at, I've been looking at yeah, because guess what? You can build a whole system around dojis and Doji Trader, right? DojiTrader.com. Obviously, right? I don't know if it exists, but I'm sure somebody's probably got something like that. Here, you just, in fact, there could be a simple rule set, right? Just buy the doji, put your stops at the wicks, or sell the doji. Look at that trade now. It's so cute. I'm not even through. I can't even make it past 5 minutes in this video. He goes to another currency pair and he says, well, I've been looking at these candlestick patterns. And we have 2 dojis here. I love when people say that, like we're talking to, like, oh, how old are you? I'm 3.5 years old. Okay, this is a doji. Now, you have 2 in a row. A lot of indecision. I think this could be a buy. What? No, you missed it. Look at how it retests the dojis. Interesting. Notice that too. Retest the doji. Enter. Yeah, guess what? Same thing here. buy, sell with stops on the wicks. Monster trade. You should be long at the doji. It's not like, well, I think it's turned bullish. No, guess what? Look at RSI. It's a reversal. It's a sell for the moment. You have to say more overbought. If you look back on this RSI, of course, I do think this is gonna fail, and you have to be anticipating the trend line breaks on this for sure. But I don't think you can sit there and extrapolate so far out and dial this so far. Now look at this hammer, which if you go into RSI is going to give you, this hammer is this rally in RSI. So if you're going to do your reversals, which these are going to start failing pretty soon, this is a signal to sell because it is more overbought on RSI, but at a lower price than previous, where you're attaching that thing. Project off the lows, but guess what? This will be the biggest pivot in the world at 110. Because if this starts to, then there was some point this is going to turn around. And this even here, this doji is connected to that hump there. We're already starting to fail to get the reversals. This is a shallow reversal. That would mean that this would have to go down from here. I don't see it. It could come back to the top in RSI. Another thing you do is there's a platform out that lets you put your orders on the indicators. It's called Virtual Trader, but it's in the States only. But you can, or something like that. It's out there. It's a free platform, but it's so complicated. I mean, it actually choke. It would choke most computers if you put too many indicators on. It's just gonna bring your platform, your computer to a screeching halt. But it's very cute. You can put your orders on the indicators. But look at this thing. This is totally it's too late if you're getting in the Gulf. It's too late. Some guy has. I mean, I get that not everybody. Another thing is that when people watch Akel Stokes and all this empowered trading, they're saying, well, these guys, I mean, come on. All they're really offering you is, I guess, some hand-holding if you're going to pay them a bunch of money, or they're going to watch you trade in a live room, but they're leading you down a path. I mean, you're looking at the world through their eyes, and you're trusting them because, well, they must know what they're talking about. But there was a guy, Eric Hoffer, out of in California, who was just a longshoreman who wrote a book, and it was called In Our Time. Now, this is a guy who had just common sense. I'm going to put this Eric Hoffer link in this video. Now, it's hard. The interviews are kind of, this is from the old days. Interviews are kind of hard. But when you hear this guy talk about race relations, about everything, he's just like, this guy has got so much common sense, and he's just so straightforward that's the mindset you have to have on this trading thing. I can't imagine having this. Oh God, bringing like this is the problem you have with the economy and the regulations, is that you can hardly make a move now without hiring a team of specialists to see if you're violating a law. Now, if you're starting out a business, who's got money to hire a team? You don't. I mean, this is the thing. In trading, you're controlling all of these decisions. To step into the world of overcomplicating something that really is not. I mean, it's mostly a lot of this thing. A lot of these Fibonacci tools people whip out, I think it's just to make them feel like they're doing the best they can to be a very serious, competent trader, and that all makes sense. But in the end, it's a very crude, basic approach, and all of those Gartleys and all those fibs and all those things aren't going to take the fear of winning and losing out of your head, and the inability to have patience for the once you get in a trade to ride it out to when the market's done moving and realize the market's done moving, and not have yourself so locked into your targets. Like sometimes the market's just, you could, I'm sure everybody's been in a trade where they say, you know what, it's not, the market's just not, I'm just going to take what I got and run. And the argument against that is that, oh, well, you're not trading, plan your trade your plan. Listen, when you're on a date with a psycho babe, I don't care how good she looks, you're going to have to find an excuse to get the hell out of there and to basically delete, make sure you change your phone number when you get home, because you're going to have a stalker or something. It's not going to, you got to know when to cut bait. Now, if you're just starting out and you cut bait and then it turns out to be a winning trade, it's almost more painful than if they just stopped you out and you just took a huge loss, because missed opportunity can be as painful as literally losing money. All sorts of psychological mind traps you can get into. But yeah, I don't know. I just hope that helps anybody that's gonna, I would say, waste money trading, signing up with people, anybody really. When I started out trading commodities, and I didn't even know what technical analysis was, and I had a broker that was holding my hand for like $35 or $45 round turn. I was trading with Jake Bernstein futures. Jake Bernstein wrote seasonal books. This is 1980, like 1988, and these guys were just beating me up, and so I had really crude software, and it was called Advanced Chartist, I think, and I put up this oscillator. It was a histogram, and I loved histograms because it gave me like a bar at the bottom of the chart, and I can actually say, look at this thing. It's and this is live hog chart I'm looking at. So we're trading these live hogs, which is kind of easy. You didn't need a lot of margin to do that. And you need a ton of money in your account just to even trade commodities. And you could not trade high granularity, a bunch of orders, because every time you're doing the trade, you're calling a guy on a phone and saying, I want to buy Christmas corn. You couldn't say December corn, because if you said December corn, he might have meant that you meant November corn, and you're in the wrong contract. So you had it it was so brutal. And you're paying per trade round turn. Now, if you put on two contracts at the same price, you're only paying one price, right? But now you're doing what these guys are doing, which is you're putting in too big of an order. When you in Forex, the beauty of Forex is you can pepper the chart, and you don't even have to call a broker and tell him, oh, listen, I had brokers tell me, you sure you want to do that trade? I'm like, you're kidding right now? That was like the biggest winning trades I had. It was the ones where the broker goes, well, we just got to report out this soybean oil is going. I'm like, you know what? Give me two contracts now. Just because you said that, I'm going to buy two. And there was nothing more gratifying than moving my stop on a winning trade, which I was told by the broker and their research team and their this is why I have such anger and resentment for, I'm the chief strategist at FNUT Futures. Look at these guys are complete clowns, right? If that was true, they'd be trading at home their own money. So that's what I'm doing. I'm trading my own money. I don't have a service. I don't have a subscription. I don't care if people, I guess I care if people watch my video and they're like, oh God, never thought of that. That's my whole thing, is I'm into enlightenment. I'm not into, and I'm angry and patient, right? I don't, that's totally on the disclaimer pad. Angry and Patient Trader was my optional name for the channel. And who isn't angry and patient? I see it all the time in traffic. I see people tailgate me. The light's red, okay? I'm in traffic. The light's red. I want to say, dude, you cannot see that light's red. Do you own a brake company? Why are you going 30 miles an hour or 20 kilometers an hour into a red light? It's red. Don't you want it so that, you know what, you downshift, you come up to the light, you're doing 15 miles an hour, you time it so that when the light turns green, boom, you never even touched your brakes, you never even had to change your throttle. If you look at trading like driving a car, yeah, you go with the flow of traffic. You're not going to drive the wrong way in a one-way street. That's like going against the trend, right? But you can do that in trading. You can actually make money counter-trend trading all day long. If you can see the subtle clues, right? Like the subtle clues in trading would be nobody's on the street but you, no police, it's a holiday. It's okay to drive the wrong way in a one-way street because I want to get down there. I don't have to drive around the whole city to get where I need to go. So every time I'm doing stuff in the real world, I'm always correlating that to what would that be like in trading. Now, some of the stuff does not work out. Like I said, a long time ago, if you're a sociopath serial killer, I want to talk to you because we could make so much money together. You would take trades I would never take because you don't care. You don't have a conscience. I just tell you what to do, you do it. You don't say stuff like, why are we doing this again? Is this immoral? Is this ethical? No. Sociopaths have none of that. That's why Jason Stapleton, Akel Stokes, these are good-looking people. These are intelligent people. These are people that have they spent so much Jason Stapleton spent a lot of time creating an image with his background and all this stuff, and people are still lured into that. I was sucked into some dumb stuff on my car recently where guys like, oh no, and this is magic potion. I think they used to call it snake oil in the old days. I'll put it in your car and it's going to be great. No, it totally ripped the car apart. But just like anybody else can be duped or tricked or thinking, yeah, maybe this time it'll be different, right? Maybe, but no, it's always, you have to ask yourself, why would you trade advanced patterns? Because they're better than regular patterns, and they want an edge, right? Everybody wants an edge. Of course, they say if you're going to trade on the edge, right, you get cut to death. So there's a lot of things, but trading is not like real life. You can remarry your spouse 8 times. You can retest a bottom 8 times. You can do all the things you couldn't do. Problem with empowered trading, these guys are bringing in, they're bringing in too much intellectual power into something that doesn't need it. What you need is the ability to be flexible. So flexibility trees are flexible. Trees are not intelligent. The reason why the trees survive the storm is they're flexible. If the trees were rigid, and if you notice the rigidness, and of course that happens when people get older too, they get more rigid. They're like, no, that's just the way it is, shut up. So as you gain knowledge, you can actually become a worse trader over time. And it's not like if you think you got it all figured out, it's like, those are my rules set and that's how I'm sticking to it. Now, you might be missing on a lot of killer trades and you could probably survive. In fact, it's funny because, it's Akel Stokes and these guys admit they're making 5% and they think that's killing the market. Yeah, you're doing better than when they're going to charge you money to have your money in the bank, right? In other words, if you have negative interest rates, 5% in the market, you're doing good, right? You're up 6%. We've had negative interest rates of 1%. And the negative interest rates, who cares? Who cares I don't care if they charge me 2% to have my money in the bank. I don't care if they charge me 5% to use my debit card. Who cares, man? That's the spread, right? If you don't like the spread, put your money under the mattress. That's been the old cure, right? There's no spread on that. If you're going to start using convenience of electronic transfers, that's what it is. Deal with it. You don't have ass cancer. Just go along and live your life. I don't know. You're sidetracked here, but it really comes down to your attitude, your mindset. You can't care. This is why sociopaths make more money. You can't care about this stuff. So it's very difficult. And it's always been difficult for me to sell the market because I'm too optimistic. Or I wouldn't even bother saying, hey, did you ever think of that? Like, if you're like, hey, I got an idea, people are like, yeah, been there, done that. And it was that good. It was that easy. Everybody be doing it. No, a lot of people wouldn't even pick up the first. In other words, there's so many bad arguments for that. I mean, that's such a stupid statement because, like I heard one, if I knew where the market was going, I would be on a desert island. I mean, I'd be retired. No, you wouldn't. Because you can't just make a fortune off of one trade, because if you loaded that one trade so hard and they stopped you out, you have to, in other words, there are going to be trades where you could actually stop trading. But if you're a trader, why would you stop trading? If you're a musician and you just did a platinum album, are you going to stop playing music? Well, it was that easy to write a hit song. You just write one hit song and walk away. No, you wouldn't, because you're a songwriter. These are retarded arguments. Now I'm just going to go off on a rant, apparently, but I can't take it, right? And the other dumbest thing I hear, and I've said this before, the dumbest thing I hear is, well, when you go up against when you trade in these markets, you're trading up against the best traders in the world. The best traders in the world? No, you're trading against yourself, your own fears, your own miscalculations. That's your enemy, is yourself. It's not other traders. They don't know you're there. They're not, it doesn't even, especially in Forex. This is not like, you could almost say that if you were trading, like in the trading pit, in a real trading pit where an order comes in and it's got an account number in, and this guy loses all the time, he's always getting late. There are guys in the pit where they look at that ticket and go, here we go. That's their signal to go the other way. They go, look at this guy. We're going to fade this guy. You're kind of trading against the best traders in that pit, not in the world. And besides, this is like the paranoia of conspiracy garbage. You're not. It's not like that. You're totally invisible. Nobody can see your orders. Nobody's hunting your stops. You just don't put your orders. You just put your stop where Jason Stapleton and all these guys are, I put a stop there. Now, the most money they've lost is on advanced patterns. Go back and look at their videos. Oh, we got beat up this week. Yeah, because you know what? You over-speculate. You over-engineer. Who hasn't got, I just saw a thing on keyless entry cars. What a joke. If that thing fails, that's a $300 repair. You're not getting in your car unless you got a manual key to boot it. You are so painting yourself. I was just in a restaurant the other day, and I went to use their bathroom. I could not wash my glasses in the sink. I always wash my glasses in the sink with water and soap. I couldn't do it because when I held my glasses under the electric eye, it didn't see. It wouldn't. I couldn't get the water to come out. There's got to be some kind of thing I could bring along with me, like a roll of duct tape off the electric eye and trick it to thinking, or set up a little miniature robot in front of the electric eye to fool it to think there's. It's ridiculous. And then I went into this guy's office. I got really early because it snowed really hard, so I went to somebody's office last year. And the neighbor connected to the office. I said, "Can I use your bathroom?" "Oh yeah." I go into the guy's bathroom. I was so embarrassed. I couldn't get his toilet to flush. Electric eye toilet. I'm like, I said to the guy, "Listen, I don't mean to leave a mess for you, but your electric eye, it's broke." And I kept on trying to convince it that I'd left the room because I heard it flush once. I thought, oh yeah, when I move around, I didn't know if I was supposed to leave the room, come in. Because it's the automation. I just want to live in a world. I hate to sound like an old person, but I am. I'm 57 years old. I just want to live like it used to be. You have like normally aspirated engines. You have your neighbor. Your neighbor. You go outside and you play lawn darts. Now you stack this thing so complex now. Of course, this gives birth to the Fibonacci mysticism, the Gartley pattern mysticism, A, B, C, D. I'm going to get in on D with a stop, one ticket orders. No. So I want to thank the people in Empowered Trading too. They're empowering me, but not in the way you would think. And every time I watch a video, I'm like, yep. Okay, so, and I can see if you can have their mentality, but realize what's really true, like the underlying truth, and then what people, like if I hate to keep going back to the girl thing, but say a girl's got fake breasts, fake eyelashes, fake lips, you can, once you take off all those Gartleys she's got going on, all those bat wings she's put on herself to pretty herself up, you can see the core of who she really is. So that's obvious, and or it may not be obvious, but you have to strip away your projection, the Rorschach of it all, and just drill down to the simplicity of. And I said this to a friend of mine years ago when he was my alcoholic buddy that was trading demos, and he was just like, "Woohoo! I'm making money." I said, notice that I said to him one day, the market can't go down forever. And he's like, yeah. I go, it can't go sideways forever either. So there's got to be a strategy and a tactic to take advantage of the fact that that is not going to go on forever. I want to be in before the breakout. I want to be cashing out something on the way out of these dojis. I also want to have the patience to ride out the move till its target. And here it would have been the this doji. I could see this as the target. And if I watch this whole setup, this is 4 hours of a garbage here. This was the end of the month here is listed on the daily. I knew this was the target. The way we got there was pretty choppy. You cannot see it on this. This looks very clean and simple. And I'm not even, this is as zoomed as I can get it. I'm running a 720 res on this. I'm not running high res because I don't watch movies on here. And I liked the lower the res, the better. And look at this thing. They trapped these guys here on that wick, ripped it back. You could see that on a daily, and you're trading the daily. And the other thing in this video is, he says, well, the daily, I don't trade the daily, but you could put a buy limit at this wick. How can't he see this? He can't see that. Wait a second. I noticed that right away. I noticed that one day, this idea that you have to drop to a lower time frame, another garbage myth. Why? If you mark off the body of that candle, huh? You mean to tell me I can, wait a second, what are you saying again? You can put a buy limit down here and get it? Yeah, guess what? Forget the lower time frame. What if you just put a buy limit there? How'd you do on that trade again? Of course, this presupposing you wait 3 days, and I didn't wait. I got the hell out on the first blast up. But you could reload the wagon. So if you got in down there at that wick, how many pips is that? And this is on this system here, on this grid, I'm running these big green lines are 100 pips, and this is the black lines of 50 pips. So that's a 25 pip stop on this entry. The trade looks like through the whole movement here, it's like, and actually the wick on there is just astounding. But it looks like this, right? The idea that you have to go down to a lower time frame, the major supports in here, if you have a stop here, buy limit here, 25 pips stop. And I commented on this guy's video because in the beginning he says, well, why would a good risk to reward ratio matter if you don't know if it's a good trade? That is stupid. How does he know it's a good trade to begin with? Is he that good at trading? How about you have a buy limit here? Okay, you're up 50 pips. 100. I'm sorry, no, you're up 100 pips here. 150 to the doji. So you risk 25 pips to make 150 pips. You risk this to make that. His ratios are like, well, I'm gonna get in here, gonna stop here. Yeah, you break even trading. Anyways, I don't know. I just I hope that helps. I just could go on forever, as usual. I love trading, but what I don't appreciate is the misinformation that people are paying for. People are paying for this stuff. And why on God's green earth doesn't this guy put a trend line in? Can't we see this trend line? And I'm not talking about the wick trend line. The wick trend line is a volatility trend line. It looks like this. That's how you draw a trend line. Not for me. I draw a trend line here. I know these two peaks exist. Price over time. Into the doji. Touch, touch, third touch. This is the trend line to break. Anticipation of the break of that trend line. If you went long here, you hold through the break of that trend line. Maybe it comes back and retest that trend line. Maybe not. Maybe it hits your target. But When that 3 hits, you're in before everybody else. If you get in when these guys get on this break of the trend line, uh-oh. Trap, rape. Trap and rape. I was just at a party with some people. They don't say the word rape. I'm like, it's a word? These are young people. 35-year-old idiots. I got to find new friends. I love kids, but come on, people. This is, and I'm just going to close with this last complaint. People are so wealthy. I don't care if you are a bum. You're a zillionaire compared to the guy from the 1600s, right? Who died of an abscessed tooth. So you're living so good you don't even know it. And this guy kept asking me at this party last night, "Can I use your phone?" I said, "I don't have one. Don't have a cell phone." "Oh, come on. Let me use your phone." "Why aren't you letting me use your phone?" Now, the assumption that I have a phone is hysterical. I have a tablet, but I can't dial out. I could place a trade for you. I wanted to say, you want to do some trading on the weekends? We could run a demo on the, let's see if I could, sorry. But I don't know, man. I just don't know. Trading should not be this complicated. Look how clean this is. I mean, and trend line on close. Always going to be you're going to be the first guy in. The first guy in. Nobody's doing this. I'm still waiting to see the guy that draws a trend line on close. Break trend line, get in. So, yeah, come on. And where's the E pattern, right? A, B, C, D, E. I like pretty much A, B, C, D, E, F, G. I don't go to H because it's not in the music scale, right? There's all sorts of reasons to get lost. I guess my point is that you can get lost in all these things that you think are going to give you a super edge, but in the end, all the indicator lights in your car, all the idiot switches. So when the car's making a strange sound, this is your first indication something's wrong. Idiot lights, or no idiot lights, no sensors or no sensors or no sensors. When the car's making a weird sound or is behaving differently, you know what? Maybe you have to look to see if something's wrong. The reliance on indicators on your dashboard and the reliance and trading like that, well, the stochastics says, you know what? Stochastics could never adapt unless it was an adapting indicator, and then you've got a whole nother complexity mess on your hands. That is not going to say, that's not going to be, like, you wouldn't look down at your indicators if you were driving the car. You just pull over if it was making a strange sound, or if the engine seized. You don't need an indicator for that. Your tachometer's now at 0, your car's at 0, and people are honking at you. That's like you just blew up your account, right? That's the same scenario there. The one thing about trading that's completely different than driving a car is you could blow up your car. You've got 10 more cars. You blow up your account. If it's a small account, it doesn't matter, right? If you lose on that trade, trading is, in other words, would you rather trade with a fleet of small cars, or would you rather drive one big fat limo and trade one position? No, you want a fleet of little baby cars because you can always get where you're going. There's always a, that car, in fact, if that car, what Akel Stokes is saying that, well, why would you get in a car if it was going to be a bad car? Because I got 20 cars. And they're all behind me in a caravan, so I'm towing the other cars behind me. If that car blows up, I just hop in the car behind me. Trading should be that emotionless where you don't care if you lose on that trade. It's not even about that. It's just about finding entry points that are logical. He's so zoomed out on this video. I'll put the link to this video in here. I don't want to put his video up because I don't know, somebody sent me like they're going to sue me or something because I used the word, what was it, pattern or something. It's so funny. Some guy's got a copyright on ciphers and bat wings. He's got a copyright on, I don't even know what it's called, whatever they call these patterns, these ciphers and bat wings. That was so cute. I'm like, God, get a life, man. Go trade this stuff. Like, why would you lock up a patent on a, like, say the word Elliott wave or something? I don't fucking know. Anyways, okay, no, I'm totally lost. But I don't know. I just, it's just, trading is something that you should trade a size that you can consistently do a certain style of trading that you're comfortable with. And you'll know you're trading good if you don't have any type of attachment to the outcome and you have a completely emotionless approach. And you can go study Mark Douglas, who basically started from scratch and examined the mindset and the thinking that goes into trading, winning and losing. And in his book, Disciplined Trader, the first book, he spells it out kind of raw. It's like reading, it took him a long time to write that book. But he's just taking you through the psychology, and it's all psychology, because that's what's going to let you trade with a carefree mind, not a careless state of mind, but carefree. To be a carefree trader, you're just like, yeah, buy, sell. And that's the way to go, because you're not always going to get your 300 pip move, and 300 pips doesn't even matter. It's about money. Like if you just made 10 pips on 5 standard lots, you made money. If you just made 400 pips on a mini lot, you didn't make as much money, but you can brag about the pips, right? So these guys talk about pips and all that, never talk about money. And anyways, that's my my RSI presentation. Plus, just the where we're at in the world of trading. Trading's been going on a long time, and there's all sorts of approaches. There's Renko charts. There's cloud trading, and cloud trading is like, wow, the rule list. And that's another thing, a lot of diligent traders, if you consider yourself to be a person that reads all the instruction manuals, they buy a car and they're like, I'm going to read the manual. I don't read the manual. I'm like, I think I know how cars work. Now, the car could actually have a problem for me because you didn't read the manual, did you? And I'm like, hell no, I know what's going on here. How dare you insult my intelligence? I don't need to read a manual on a car. I need to put gas in it. It says right on the thing, unleaded only. It says it all over the car. Some people will actually go through this Stapleton or read a book and they're like, oh, this is strict. And I've tried that. Problem is, when you go to the real world, you're like, well, where am I now in this pattern? Where am I now in this behavior? And I would say, I would substitute the word pattern for behavior. Market's behaving a certain way. And I don't know, I just think there's too much of this group thinking other people have joined this bandwagon. And, when the guy asks Akel Stokes, I have my orders at break even, should I tighten up my stops? I said it's a money management issue, and all the money's made in money management. And that's the boring statistical situation here. Don't understand, take a look at this guy's video and really examine it for how he's primed himself to lose. And I did a video called "Are Gartley Patterns Making You Lose Money?" And people take umbrage at questioning this. They think this is rocket science, or there's some, I've discovered the Da Vinci Code. My God, man. I mean, you've really picked it that thin that you are going to backward engineer to prove your point. It's ridiculous. Anyways, I hope that helps. I know I feel better after complaining. Like I said, I don't have anybody to complain to, and I'm assuming the people watching this are traders, and I guess you have to vent, or you end up like, look at this 4-hour, look at this wick here. The news came out. So I bought this when it slammed down, and I knew this was going to go to complete take out the top again. I've seen it before. Sometimes it just goes straight down. Never looks back. Actually, they bid that up into the news. I don't know if you were there for that, but they bid that up into the news, and then they just smash it down. They do that a lot. bid up into the news comes out, blammo. And they trap the breakout traders here. Just going in simple terms, breakout, trap, come back, trap these guys, wango tango. And if you've never traded before, or you're trading like, well, wait a minute, my moving averages say I'm in an uptrend. This idea of the uptrend, that's another mind trap. How do you explain all the pips that were made on the sell and buy side of this? You can't, because it has nothing to do with trend. No. If you were buying here, you'd say, yeah, it was an uptrend. I bought here. I made money. But you could have sold here. Made 75 pips. So that's, you're just narrowing your perception levels with over pattern trading. Is you're filtering out what's really going on. You know, you're at the party and you're like, this party's terrible. There's one guy in that room that you could talk to that has half a brain. And if you're too quick to, in other words, if the party's a black tie party, which means you're in an uptrend, say it's a certain style of party, it doesn't mean that everybody in there that's wearing a black tie has a black tie mindset. So you're never really seeing people put up a facade. You're never seeing the things as they really are. And I guess so they call that fake out moves, when the market moves contrary to the way you think it should move. And so it's complicated from the standpoint of your perception of reality. It's not the market's very simple, but what you project on top, when it becomes a Rorschach test, ink blot test, what do you see? Then you could get a heap of trouble. So, all right. Well, thanks for watching my rant, if you made it this far. But I couldn't resist, once again, to respond to, and it's been all week since they posted a video, so I'm always looking to see something to chew on here. But this seems to be these guys are the rock stars of trading, so I couldn't resist.